right, time to get an update on that Warren Buffett placing a $4 billion bet on JPMorgan Chase and adding to it. That is certainly helping the stock, having a pervasive effect on a lot of other financial issues. On a day where most of them would likely be taking a hit on this Theresa May news on the fact that there could be exposure to that region of the world. It gets a little overwrought and overdone. But Charlie Gasparino, on whether this is a sign that Warren Buffett is not really focused on that, not really focused on Democrats who want to crack down on banks in this country, taking power in the House.
Well, first off, I don't think they can. We spoke about
Democrats.
Yes,
right?
Once you have the Senate in Republican hands, anything they do will be sort of counteracted. Let's just say they said they had indictable evidence on Deutsche Bank, right, which is a bank that did business with Donald Trump and clearly is going to be in the crosshairs of Maxine Waters, the new head of the Financial Services Committee. So they could send that evidence and a criminal referral or a referral to the Justice Department, and the Attorney General who works for Trump can say, okay, I'm going to stick it in this drawer. I mean, that's not really where her power is going to be to intimidate and harass, and that will mainly come for the president rather than the big banks. This is interesting, I think, because I think what Buffett is saying, first off, he likes Jamie Dimon a lot. He thinks it's a well-run bank. He likes Jamie Dimon as a leader, likes a lot of what he says as a sort of thought leader in the banking business. But he's also, I think, making a bet that interest rates are going higher. And here's why I'm saying that. And that may not be good for other stocks.
That Warren Buffett is making.
Yeah, it may not be good for other stocks, but banks generally do a better, particularly in a higher interest rate environment, because they can charge people more.
That's right.
And the lag between what they charge people and how they have to increase sort of returns on savings and checking accounts is pretty wide enough that you have this spread that's...
so their CD rate increases are slow, but the ones on their loans...
Absolutely.
Give you this chasm
right.
That's easy money.
Yeah, right. And that's, I think, what Buffett is banking on, at least in the short term. And he thinks JPMorgan, quite frankly, if there is a banking crisis, well, guess who benefits from that? JPMorgan benefited the last time when there was the financial crisis. I mean, JPMorgan, if they let every bank go under, the only one that might have survived, I only say might have because they had some stuff on their balance sheet, was JPMorgan. If there were no bailouts, no AIG bailout, which was a backdoor bailout for all the other firms, and no direct money, JPMorgan had the best chance of surviving, and I think that's what he's also betting. If there's one bank, this is my bank. And so higher interest rates, though, just so you know, I mean, listen, if you want to know why the markets are trading off, although they're all over the place today, there's two things. Trade is a big determinant, and interest rates. Anything that pushes interest rates up generally is bad for stocks because you'll go for other investments. And there are two things that might push interest rates up. The Fed unwinding its balance sheet and raising the Fed funds rate. But also, if the tax cuts don't work, you're going to get higher deficits and, in response, higher interest rates because prices of bonds will go down and interest rates go up. You have to attract people to buy your debt when you issue more of it. So you have to give them higher interest rates, and that will affect everything. So those are the sort of things that people are sort of weighing right now. When I talk to investors, that's what they're telling me.
Do they mention GE and all the credit worries there?
Yes, everybody mentions GE. And I think, listen, Buffett
you talk about exposure. A lot of people exposed.
Buffett is one of the best guys when you ask him, like, when does he, make his investments when, everybody else is out and he picks the bottom. Okay, he didn't do that with JPMorgan, but he's been known to do that. And what's interesting is that he's not in GE right now. I mean, you would think at $8 a share.
Remember when he and Jack Welch were tight and big admirers? Bob Wright, of course, the former president of NBC Universal, top vice chair, I think, for a while at GE. He was weighing in on the GE crisis yesterday. Why don't you react to this? You and Jack Welch and a team that was considered like a Wharton dream team. What happened?
Somehow or other, we lost our, and I say our because I never can quite get past it. They just lost our bearing and dealing with the balance sheet. And those insurance liabilities should have been dealt with.
And then he went after Jeff Immelt, which was the more sexy quote. I don't mean to second guess you guys, but it was interesting that he woulda, shoulda, coulda.
He didn't do the job. Well,
so now I'm wondering if that's okay. It doesn't do any good pointing fingers now, but I do wonder about what happens at GE.
Well, I find it interesting that Buffett's not buying at the low, just from my standpoint, because he's usually the guy when everybody else is scared.
That's right.
He's in. he must not like what's still on the balance sheet and what these guys have to do. I was talking with Bob before he went on, and I said, Bob, why don't they just? I said this is on the table. Break it up into 3 separately traded companies. Sell off the extraneous stuff, healthcare, aviation, and power. Right? He said it's not that easy. They got $30 billion in pension fund liabilities. You need some of that cash flow to pay that off. It's not like the old days. You can just walk away from your pension. Like someone can go after them. Like they can be sued. They can be prosecuted. So this is harder than you think.
Is that right?
That's what Bob. Bob. That's
no
his
idea.
direct. And here's the interesting thing. I don't know why Buffett isn't in there at 8. It's got to be. Some of its parts are worth more than 8.
Remember when it got to 20, got below 20, and everyone said, "Oh, what is
17?" I remember everybody's like, "It's got to be worth more than 17."
It's amazing.
It's got a high. So I'm just saying that the fact that Buffett's not in there, a real bottom fisher like that sees value when everybody.
But that's where he is concentrating his financial. Big purchase.
Look what happened during the financial crisis when he knew, and he actually knew that AIG was going to backdoor bail out everybody. When AIG was bailed out, you essentially had all the toxic debt on the balance sheets of the banks essentially bailed out. That's what happened because they insured that debt.
That's right.
He went in and bought Goldman Sachs. Remember that. He knew that people were so scared he was going to buy the premier investment bank that was guaranteed to survive. He is not saying that with GE, at least not yet.
All right, buddy. Thank you very much. Charlie Gasparino